welcome you to tune into your trades with me, Ankita Saxena, and with me is Snehi Shah. Let's take stock of how the markets shut shop today. In fact, it was a third day advance that we saw coming in on the markets. It hit Nifty hit its 3-week high led by Adani Ports and NTPC. Nifty mid-cap and small-cap indices also advanced for the 8th consecutive session. A good day of markets coming in there. We managed to hold on to 24,400 levels on the Nifty. We did see the PSU pack also see a reversal coming in. In fact, in the last two trading sessions, PSU pack had been under selling pressure, but Nifty PSU picked up from today. It snapped its 2-session losing streak. It was the top sectoral gainer. Nifty PSU Bank also hit 3-week high. Of course, Union Bank, Bank of India were the banks that were leading from the front. Nifty Bank also hit its 2-month high, advancing for the third consecutive session. Canara Bank, Bank of Baroda were the leaders here. Nifty Energy also surpassed its 20 DMA. In fact, NTPC, ONGC, they were all trading with strong gains of almost 1.5%. Also, we had Nifty Energy that passed the 20 DMA. It was NTPC, ONGC that was leading the pack. Nifty Metals also advanced for the third consecutive session. Nifty Auto advanced for the third consecutive session. TVS Motors, Ashok Leyland, they were the leading players that put Nifty Auto in the fast lane. And we had Nifty FMCG, the only one that was bucking the trend, saw a decline, the second consecutive day of decline coming in on Nifty FMCG. Varun Beverages, Radico Khaitan was leading the losses. But a couple of other names that were in focus today, of course, was HDFC Bank. Big moves coming in on HDFC Bank. It crossed its 40 lakh crores worth of market cap. It has now become the third largest company in terms of market cap after RIL and TCS. We also had Adani Ports, like I mentioned, was the top Nifty gainer. It was up 6% on the back of its operational updates. Management commentary coming in on the volume guidance, and the Motilal Oswal maintaining a buy on Adani Ports. But the other account, Snehi, that you track very closely was Swiggy that reported its numbers. Swiggy was trading up in trade right before the results come out, but take us through what the results look like and how is it shaping it up for Swiggy?
Absolutely. So, operationally, it seems to be the first cut seems to be right off the bat. It seems to be a weak set of numbers coming in because even though the revenue is largely in line, you have the EBITDA loss that has spiked up sequentially. Also, the net loss has gone up sequentially. So, we've had that cut coming in on Swiggy as soon as the numbers were declared, but nonetheless, it seems to have ended the day on a positive bias. And we'll also understand more about these numbers a little later on the show. But let's come back and talk about another stock that was in focus today, and that's Torrent Power on the back of their QIP opening with a floor price set at 1,555 rupees per share. That stock has done phenomenally well in today's trading session, and it was gaining through and through today's trade. You also have cement stocks that were in focus on the back of brokerage bullish calls coming in. The likes of ITC and Varun Beverages were in focus on the back of a potential GST hike on those items. Cigarettes and aerated beverages coming in from 28% going all the way up to 35%. Of course, this is just buzz that we are hearing, and these are media reports. There is no confirmation on this, but nonetheless, this has spooked the street in today's trade. Let's move on then and make more sense about the trading session that we've seen today. And for that, let me welcome Laxmikant Shukla, Technical Analyst, Institutional Research at Securities India. Laxmikant, hi. Thanks so much for joining us on the show. Give us the sense of what you have seen when it comes to the market moves today. Yesterday, good session coming in for us. Also, tell us if, it's okay to get used to this now.
Good afternoon to both of you, and thanks for inviting me on your show. So talking about Nifty, finally Nifty has broken its shackle of 24,350, which it has been restricting from last few days. But today it has given the breakout from its cup handle pattern, which it has formed on the daily chart. So we could expect that this ongoing momentum will continue in Nifty, and this breakout has come with the decent volume with the formation of bullish candle. And the expected target of this cup and handle pattern is coming around the levels of 25,200 to 25,500 zone. But before that, Nifty need to surpass its immediate hurdle of 24,540. Then after 24,700 would be the major hurdle for the Nifty in the upcoming sessions. Because at these levels, we have seen 100 DMA with the 20-week moving averages, which both these moving averages are coinciding at the same place of 24,700. So we expect that Nifty could break the levels of 24,540, but I think 24,700 would be the crucial hurdle for the Nifty in this ongoing rally. So once Nifty surpasses the levels of 24,700, then we could say that Nifty will be the out of the wood and then we could expect the target of this cup and handle patterns in the zone of 25,000, 25,200 to 25,400 zone. So our view will be a bullish till it hold above the 24,000 levels on the downside. Even if we look at the derivative data, where we have seen a maximum put OI base around the levels of 24,000, which is again fostering the support of Nifty around this zone. So we could expect that till Nifty hold above this level, this momentum will continue, and once it surpasses the levels of 24,700, then we could see further upside momentum in Nifty toward the levels of 25,200 to 25,400 zone.
All right, Laxmikant, so those were the levels that you're penciling in, but tell us about in this, bullish, the trend looks bullish. So in this bull run, where do you see value in which pockets? I mean, we did see a reversal coming in the PSU pack as well from the last two trading sessions. They have started picked up top sectoral gainer. Do you pick out any of the counters from that pack? And is there any other name that's fascinating you in this market?
We expect Nifty PSU, Nifty Auto, and Nifty Metal could gain traction in the upcoming sessions. And if we look at the chart of Nifty PSU, so after 2 to 3 days of profit booking, we have seen the formation of bullish belt hold candlestick pattern. Now it is approaching to its 200 DMA around the levels of 7,010. Once Nifty PSU bank crosses this level, we could see further upside momentum in Nifty PSU toward the levels of 7,500 then 7,800 zone. And if we look at the ratio chart of Nifty PSU and we compare from our benchmark index, even that is trending higher. So I think once it crosses the levels of 0.29, then we could see further outperformance in Nifty PSU banks. Now talking about Nifty Metal also gained strength from the lower level, and from last 2 to 3 days it is also trending higher with the formation of higher tops and higher bottom. Even the ratio chart of Nifty Metal, while comparing with benchmark index, it has formed double bottom on the daily chart. So we could expect this upside momentum will continue in Nifty Metals also. So I think three pockets which could be crucial for Nifty to take it higher, like Nifty PSU, Nifty Auto, and Nifty Nifty Auto, Nifty PSU, and Nifty Metal. So these are the three sectorial indices where we can see upside momentum.
Lakshmikant, but could you also tell us your stock specific bets where you are seeing value, the pockets where you are seeing value on a stock specific basis?
First, I would like to recommend Punjab National Bank, as this stock has been bottoming out near its prior swing low. So we could expect that consolidation breakout in Punjab National Bank once it crosses the levels of 108. So surpassing above this level, we could see a upside target of 118. And while making a long position in Punjab National Bank, one has to keep the stop loss of 103. So 103 would be the crucial levels, and till it hold above this level, we could see upside momentum in Punjab National Bank toward our target of 118. And second stock which I would like to recommend is from the auto space, that is Ashok Leyland. So yesterday it has formed doji candlestick type of pattern, and it has rebounded from its prior swing low of 225 to 26 zone. Now it has also reclaimed to 100 DMA levels, which is coming around the levels of 234 with the formation of bullish candle. So breakout is expected at the levels of 237, from where we could see further strength in Ashok Leyland toward the levels of 248 to 250 zone. So in my sense, I think that one can go long from the current levels in Ashok Leyland around the levels of 230 to 235, and once it crosses the levels of 237, then we could see acceleration in buying momentum in Ashok Leyland toward the levels of 250. And one has to keep the stop loss of 226 if we see any kind of blip in this stock.
Right, so two counters, a PNB and Ashok Leyland on the radar. Thank you so much, Laxmikant, for taking the time out and joining us. We will let you go on that note. And we'll move on to the word coming in from the wise then, as India's consumption story gains momentum. Experts remain rather optimistic about the sectors tied to urban and rural demand. From travel and real estate to FMCG and premium goods, the rebound is driving fresh investment strategies across the board. Let's go across and listen in.
I think there will be some support coming into mass consumption because of these income transfers, and that should really provide some bottom to the growth in this segment. I think we are still positive on high-end urban consumption. I think real estate is one sector we are very constructive on. We are still constructive on hospitality, travel-related sectors.
Second half will be better than first half in terms of growth, thanks to festival season pickup, wedding, and government capex if it reaches budgeted target. Put all these things together, you can pick up in consumption as well as in investment some of the bets. In consumption, we are more bullish consumer staples than consumer durables. We are more bullish rural India rather than urban India. And we are still bullish on premiumization rather than mass market.
Many of the consumption sectors have done badly for a long period of time. The valuations, even after doing badly for a long period of time, is not dirt cheap, but they can give relatively better returns maybe.
Okay, well, let's keep it going from with the word from the wise segment, and the rupee has been currently ailing against the dollar, and for that Naveen Mathur, Director Commodities and Currencies at Anand Rathi, believes that the rupee can remain at 84.5 to 84.7 rupees per dollar. He also adds that Trump's measures will be positive for the dollar. Let's go across and listen in.
What we have seen over the last couple of days has been largely because of the dollar. After the US elections, the president-elect Donald Trump has announced certain policy measures which would be positive for the dollar index, and therefore the dollar has appreciated largely. From the downside, we have seen in the last few months at around 104 levels or so, to even touching beyond 107. Currently, it is at around 106.47. Now, that's one of the major impact, which is taking the rupee on the depreciative side against the dollar. India's story still remains resilient, and we feel that the rupee would therefore be around 84.50 to 84.75 kind of levels. The RBI would not like the rupee to go beyond 84.75 or so.
And well, with that, it's time for us to slip into a short break. But before we take the short break, we at Times Network are back with our flagship event, the India Economic Conclave, presented by IDFC First Bank, which has been the epicenter of igniting the right conversations pertaining to India's growth. The 10th edition of India Economic Conclave, through its aspirational theme, Fast Track to the Top 3, will chart a roadmap on how India can accelerate its ascent to becoming the third largest economy in the world. IEC will feature the biggest policymakers, global voices, economists, and corporate honchos. Tune into Times Network to witness all the action live on the 12th and the 13th of December.
Hi there, welcome back to Your Trades. Let's take a look at how the derivative space has shaped up today. And when you take a look at the December expiry, you have long build-up being seen for Nifty. So positive move coming over there, and trend for Nifty Bank also is long build-up. So trend is looking positive going ahead. If you take a look at India Wix though, however, 14.3. So it's also been looking good on the India Wix so far, because remember a couple of weeks ago we had gone as high as 15 and a half, and now we've come down to 14.3. Another 2% cut coming in today. So very good move coming in on India Wix as well. If you take a look at the Nifty active calls and put levels, you have call buying being seen at 24,500 and 24,600. This is of course for the 5th December expiry. And on the active put side, then put writing was seen at 24,400 as well as 24,300, making 24,300 your next support level to watch out for. So that's how the FNO space, or the rather the derivative space, has shaped up in today's trade. But we are talking about the big story of the day, and that has to be Swiggy on the back of its Q2 numbers. Let's quickly take a look at what the numbers numbers have looked like, and this is what we're making out of the first cut of the numbers coming in. If you take a look at these numbers on the consolidated sequential basis, revenue has come in at 3,601 crores compared to 3,222 crores, which is up roughly 12% on a sequential basis. This is largely in line with what we were expecting here at ET Now as well. However, if you take a look at the EBITDA loss, that has widened. On the other side, we were expecting this number to go down, but it has widened on a sequential basis, coming in at 554 crores compared to 544 crores. We were expecting this number to go down at 462.5 crores, so that's a big miss coming in on our expectations. And if you also take a look at net loss, that has gone up to 625.5 crores compared to 611 crores in the previous quarter, and we were expecting 476.6 crores, so there's a difference when it comes to that figure as well. Now, overall revenue is in line. Loss and EBITDA loss are slightly more than what we were penciling here at ET Now. Taking a look at the segmental performance, then the food delivery revenue continues to grow because that has come in at 1,577 crores, which is roughly a 4% uptick on a sequential basis. We were expecting this number to go up by 6%, but nonetheless, it has come at a 4% growth rate. Out of home consumption revenue has also gone up by almost 29% on a sequential basis, so looking good on that front as well. If you take a look at the food delivery GOV, then that has grown 5.6% on a sequential basis. That's coming at 7,191 crore. Food delivery net profit has also gone up by 81% sequentially. So food delivery has done rather well, but however, what looks shaky right now is the quick commerce business, because if you take a look at the quick commerce GOV, that has gone up by 24% sequentially to 3,382 crore rupees. But if you take a look at the quick commerce profitability, then that is still not being seen because that loss has widened at 317.2 crores compared to 280.2 crores on a sequential basis. So yes, mixed set rather, if you could call it that, coming in from Swiggy, food delivery business looking strong, quick commerce looking slightly shaky.
All right, those were the numbers coming in on Swiggy, and we will wait and watch out for more details coming out on that. But moving on then, Girija Shankar Ray, who's the lead analyst, Cement Institutional Equities Research. Yes, Securities believes that the market won't accept the anticipated 30 to 40 rupees per bag price hike. Instead, he thinks that 10 to 15 rupees hike per bag would be more sustainable. Let's go across and listen into his view on that.
Even though they took a price hike of what they're expecting 30-40 rupees, I don't think so 30-40 rupees price hikes will be there because market itself is not accepting the price hike. And if any price hike happens, it will be 10 to 15 rupees, but it will roll back. First half of FY25, the volume was aggregate volume. If you consider all the 18 companies, the total volume was somewhere around 156 to 165 million tons. And what people and street is expecting 8 to 9% of volume growth for the second half, but which is highly impossible. Even though last year first half, if you 1Q FY24, if you consider that time the aggregate volume was somewhere around 190. Even though if you calculate 8%, 9%, that is not going to match your it will be still below 350, 360 level.
Well, word coming in from Yes Securities, but on that note, let's also take it across to my colleague Gaurav, who's standing by with a list of all the stocks that were in action today, that were in focus. Gaurav, take it away.
Well, yes, let's begin our list today with Granules India. We have seen a sharp fall in this stock, and the reason being that US FDA has now indicated official action indicated as one of their facilities, which is situated in Gagillapur, Hyderabad. Why this is important is that as per reports, around 50% of the revenue comes from this facility, and that is the reason why we saw a sharp fall in the stock price. Other than that, let's also focus on NBCC, because this company has recently received a new order worth 213 crore rupees from Delhi. We also have Tata Power in focus today, and the reason being that Tata Power Renewable Energy has received 431 megawatt DC order from Madhya Pradesh. After that, we also have Gland Pharma, which was in focus, and the reason being that US FDA has now approved one of their drugs which has potential market value and potential market opportunities of around $116 million if we compare it with the last 12 months. When we talk about some of the stocks, Moil was also buzzing today, and the reason being that company has achieved best performance for the month of November. They have recorded around 32% growth in terms of sales for November, and when it comes to production, they have recorded around growth of around 8.5%. Lastly, when we talk about some stocks, we also have KPIT Tech. JP Morgan again has now maintained its overweight rating and a target price of 1900 rupees. In their base case scenario, they see potential of around 42% upside for the stock, and as a result, we saw some upside coming up in the stock price as well. So definitely watching out on all these counters on the back of the news flow as well as brokerage note that were received today.
All right, with that, it's a wrap on this edition of Your Trade. Snehi and I will take your leave. Thank you so much for tuning in.
If you like this video, then like, share and subscribe to ET Now.